Hello, just thought I'd do a short video to explain how an accountant can save you money. So I think everybody's got their own thoughts about how this happens, and I thought it'd be great to just do a short video to explain how we do benefit clients. So the first thing that we do to make sure that we save clients money is make sure we get their tax returns and accounts, VAT returns, all done on time, so filed by the deadline. And we make sure that they're accurate the first time too. So we've seen clients come from other firms of accountants with like £10,000 worth of late filing and payment penalties. So one of the best things you can do is literally just get your accounts done, get your tax return done, get it done on time and pay your tax on time. And that can save you, thousands and thousands of pounds. So the earlier we get that done, the better. We are going through the process of chasing clients up now for tax return information that is due in January. The next thing we can do is just consider whether you should be VAT registered or not. So I've had clients come to me before who've set up on their own and they've accidentally gone over the turnover limit of £85,000. So where that happens, HMRC can turn around and say, well, hold on a moment, your sales should have included VAT, and therefore that could cost you like 20% extra tax on your turnover, not your net profit. So that can really like kill a business. So it's really important to plan for VAT turning over the 85 grand when that means you have to go VAT registered, and then budgeting and pricing for that going forward. The next thing we can do is look at expenses. So what can you claim, what can't you claim? Have a look at mileage versus vehicle costs. Put in some pension contributions. So that means actually locking money away until retirement, but that can reduce your profit or reduce your tax bill. It's really effective. And a lot of self-employed people are not doing that, particularly if you're a higher rate taxpayer, so you earn more than £50,000 personally. That is enormous. It really massively reduces the amount of your income that you give to the government, and it makes a massive difference over time about how much of your own money that you get to keep. We have a look at structures as well. So sometimes you might have a look at operating as a limited company. For some people, a sole trader is best. If it's a landlord, you'll have to have a look at to see if they're a basic rate taxpayer, higher rate taxpayer, and how that all affects it. And we do illustrations based on the different interest rates that are impacted by having your own limited company. You often get charged a different interest rate than you would if you have a property owned personally. We also look at other effective taxes, so child benefit and student loans, so make sure we factor those in. If you earn more than £50,000 and you claim child benefit, then you have to pay a proportion of that back, and you have to pay all of it back if you earn more than £60,000. Again, you can have a look at pension contributions. That reduces the high income child benefit rate, but again, that can't be all. That really isn't suitable for everybody, but it's definitely something to look at and worth considering. We can help you with tax planning. So if you've got your own company, buying a commercial company vehicle or electric vehicle, and increasing your pension contributions as well, can be really effective, reducing your tax. There's one client that I managed to save £18,000 in 1 year, reduce his tax bill by 18 grand, which is, awesome. It's awesome to be able to do that. It's not going to be possible for everybody, but we'll always have a look at it. Sometimes we can't save clients any money. Like there's no way. They might have earned really good money, and we'll obviously always review the expenses that are going in, make sure that they're effective and make sure that they are accurate. But sometimes there is going to be tax to pay, and there's not a lot we can do about it. It's just a case of getting your tax return in and reducing it if possible. But we'll also have a look at what planning opportunities there are for the next year. Is your income increasing, decreasing? How much should you budget for going forward, and when are the payments going to be due? So helping for you to plan your own finances. And then I guess we'll cover like what won't we do. So, we don't, as accountants, like hide people's money or use offshore structures or loan schemes or film schemes. Any dodgy tax evasion is absolutely not what almost all accountants offer. Like, it's just not, it doesn't work. The only people who get rich in those type of schemes is the people running the schemes. It's literally just generally a short-term tax dodge until HMRC manages to catch up with the people offering the schemes. So definitely would not recommend any of those type of structures. They're all coming back to bite people now, unfortunately. But yeah, so I just thought I would kind of jump on, say a couple of words. If anybody has any questions or think I might be able to help with anything, just drop me a message. Thanks.